today's episode of Canadian Mortgage Weekly. It is episode 68. We're meeting today on St. Patrick's Day. So happy St.
Yeah.
Patrick's Day to you, Joe. How are you today?
Hey, Sam, happy St. Patrick's Day to you as well. I'm doing really well. I got my green that I'm wearing today, and I'm really excited to just celebrate St. Patrick's Day and bring another episode of Canadian Mortgage Weekly live to everyone today. And how are you doing today?
Yeah, I'm doing really good. I'm excited that it also feels like the weather's starting to turn. We're getting some warmer days. I think when I was looking earlier, tomorrow I think is supposed to be like 16 degrees, which is quite a contrast from where we were at last weekend. So it definitely feels like spring's settling in.
It definitely does feel like spring is settling in. Yeah, I was out yesterday walking around. It looked really nice out there. It's not as warm as you're talking about, like it's going to be come like tomorrow, but wow, it's been a lot warmer lately, and I can't wait to get rid of the winter jackets, put away the winter boots, and start looking forward to spring and summer, like, right?
Yeah, that's right.
Yeah. Well, we got a really awesome episode planned for all of us today. Anyone watching Canadian Mortgage Weekly right now, we are just about to get into some of these stats that we usually do here on our episode, and stay tuned as we also get into the 3 ways that hot water, AC, and furnace rental and lease contracts will affect your credit. And Sam, I'm really pumped about that one.
Yeah, it's actually going to be a really awesome video. I mean, it's definitely something that I think not a lot of people know too much about, or sort of the workings of how it affects them. So it's a great way to, continue credit month, because I think a lot of people don't even know that these lease or rental contracts can really affect their credit. So we have some awesome information today.
Yeah, definitely. And credit month, that's been a fantastic way to look into some of the credit tips that we are able to help out with everyone. And I know that last week we did an episode about credit, and we will next week. Stay tuned. We have an exciting announcement about what next week's episode is. But credit month, it's a great way to just take a look at your credit and see where you're at, and be able to just improve where you're at, and hopefully that helps you get a better interest rate and a higher mortgage amount. But let's take a look at some of these bond yields today, Sam. I know we've been following those pretty closely here at our office, and just watching the bond yield over the past few weeks has been quite exciting for the two of us, as we can see here by the graph.
Yeah, there's definitely been some activity. We were tracking a lot of those highs and lows. It looked like it was starting to settle into, a bit of a tightening range. You could see around the, 1.6 mark, around there. But then over the last few days, we've seen quite a surge in the bond yield, which has taken us to, I think, the highest bond yield since, I believe it was December of 2018. So definitely big news in the mortgage world, as we're, looking at the 5-year bond yield to track where we can expect 5-year fixed rates to go. So it's a huge news, and quite a spike that we can see in the data, since I think this data starts in the spring of 2021, so about a year from the date, and it's quite high.
Yeah, very, very much so. Yes, we've seen quite an increase since that September 2021, when that going word on the street was that rates were going up, and COVID seemed to be letting off steam as well, right? So we've seen this bond yield climbing, and much more recently in the last few days. I'm not sure if this run-up will sustain itself, but it's going to be interesting to see what happens in the next few weeks as we watch this, because it has broken prior ceilings that, in the last little while. I think this is the highest we've seen the bond yield in 2-3 years, isn't it, Sam?
Yeah, exactly. We've seen it reach that high amount, and we were looking at it to see. It really peaked out over the last couple of months at about 1.8. So seeing that it's broken through that will be an indication to see if it sticks at a high rate. If you look at that trend line, from September, it is on that gradual increase, although we've seen, a couple dips in January of this year. It does look like it still is on that climb. So we'll see if it maybe starts to gradually just tighten in the 2% range. But either way, I think we can expect to see those fixed rates continue to increase, or at least stay the course that they're on now.
It's going to be interesting to watch this. You're right, especially now that it has broken that high limit there that you're talking about, Sam. Maybe higher rates are here to stay. So, could be a thing, but we'll watch it closely on Canadian Mortgage Weekly. Let's look at the CDOR variance rate here next as we plug along here on Canadian Mortgage Weekly. Looking at this one, I see it's gone up again since we last looked at it. CDOR rate is up quite substantially since last year at this point. At this point, the rate has continued to slowly increase, but still indicating that if anyone is looking for a variable rate mortgage option, still a viable option.
Yeah, that's right. Given that we had seen the prime rate increase just a few weeks ago at the Bank of Canada rate announcement, the variance still does indicate that it is a good choice. I mean, it's not saying that there isn't going to be any rises in the variable rate, because again, as we're tracking, and you can see even where it was yesterday, it's up ever so slightly, but even, from just a month ago on February 16th, it's already up 0.2%. And I think we've seen this climb be relatively consistent, at least since the new year, of very gradual increases leading up to that first, leading up to the Bank of Canada rate change, the one they just did a few weeks ago, and it's still just been on that continual rise. So again, yeah, like you're saying, because of the variance, it still does look like a good option. But I think we can also infer that as it's slowly rising, we might see that tied to the Bank of Canada rate as well.
Speaking of that Bank of Canada rate, that next announcement that everyone keeps asking us about, take your pens and pencils out, April 13th, 2022. Sam, I know right now that the overnight rate is sitting at 0.5%. I see that with the next rate announcement, there's a lot of talk happening with, our rates happening to go up again as the Bank of Canada going to pause. We're talking about an article that has come out saying that inflation really is not a Bank of Canada thing this time. It's due to other factors. So it remains to be seen what they'll do on April 13th. But one thing remains for sure: we didn't see a rate increase for quite some time, 3.5 years. So the fact that they did raise rates has really sent some shockwaves through the market.
Yeah, exactly. There's definitely been a lot of articles around this topic, and we've been, sort of keeping an eye on what some banks have been predicting as well. So it'll be interesting to see, when that announcement comes, what the Bank of Canada decides to do, because like you're saying, there is lots of factors that go into their decision, forecasting global events, pandemic related events. All of those things are usually taken into consideration. So definitely join us on the 13th when we do our pre-rate show. We'll go through all of the factors leading up to it, looking at some of those articles, what we're thinking, what economists are predicting, and we'll get you that rate as soon as it is dropped, usually around 10 a.m. or just after the hour.
That's right. Exciting to look forward to that day with you, Sam. But in the meantime, let's talk about the national house price average. I know that we were talking about how last month we had a national house price of $748,000. It did require a annual household income of around $160,000 for the first time home buyer. Where are we at today? A month later.
Yeah, that's right. In only a month, the national average for February had jumped up to 816,720, which increased that household income to approximately 170,000. So, it feels like it's just getting steeper and steeper.
Yeah, it does seem like that. It looks like one of those stocks you see when Google's skyrocketing, or
right.
Tesla stock. You have Canadian homes, super
Mhm.
lucrative, great investment. Why not get in while you can?
Yeah, exactly.
It definitely seems like there is quite a jump on the market again this time, Sam. $816,720. That's quite a number. I know that with that increase in house price, I think that worked out to a
Mhm.
$163,000 increase. Now, what did that do on the annual income that a first-time home buyer will need, or a first-time home buyer household will need to buy their first home if it's an average priced home today? I know last time it was 160,000. Where are we at today?
Yeah, so it's jumped up to 170,000 per year, which already seems steep, but we also looked into, for those first-time buyers, what the minimum down payment is on a property that much. I know that even when we were looking at house prices at the beginning of COVID, it was quite a bit more soft, but including closing costs and a minimum down payment, these first-time buyers also are going to need to have approximately $70,000 towards that purchase at the average home price. So it definitely feels like there's no relief in this announcement for those first time buyers hoping to get into the market. And like you're saying, hop on it like it's a stock. It might be hard to get into that game.
Yeah, definitely it is hard because we're seeing that it's really difficult for clients right now to obtain that $160,000 minimum
Mhm.
annual household income just to buy an average price home, let alone 170,000 now. And that's quite a chunk of change as well for the down payment and closing costs of $70,000, Sam.
Mhm.
So, and coupled with that, on top of that, the average home now, the monthly payment after all things considered at today's interest rate will be $3,860 per month for the mortgage. So that's assuming minimum down payment, of course,
Yeah.
70,000, which is
Mhm.
pretty typical for the minimum these days. So it's really good to see just how that all works. So if you're a first-time home buyer out there and you and your partner are earning less than the average amount needed for the average priced home, what you can do, and Sam and I have helped many clients with this, is add on a temporary co-signer.
Mhm.
And looking into that, that way we can boost your income. And sometimes even these days we need two temporary co-signers. But the idea is that it is temporary. It is a short-term solution for you to obtain long-term ownership into a home. But yeah, that's just amazing to see how quickly these prices are rising. I know that there's a lot more listings coming on the market last few weeks, Sam. So that's
Yeah.
really going to put a lot into perspective of what happens now going forward.
Yeah, exactly. We're starting to see, sort of that spring market pick up a little bit. And again, a lot more listings again, like we're talking about the weather being nice. A lot of the walks that I've been on, I've seen a ton of for sale signs or coming soon. So, you know, definitely there's probably some people cashing out on that new average house price of $816,000.
Mm, exactly. Well, in addition to your house these days, something else that we should talk about today is our main topic, and that's hot water heaters and furnace contracts and air conditioner contracts, because it's so difficult just to put your down payment onto a house these days, let alone have some savings left over to purchase a furnace. So a lot of these home buyers and homeowners these days have taken out furnace and air conditioner and hot water lease contracts. So today, Sam, let's chat about during credit month and how this affects the credit.
Yeah, absolutely. It's going to be a great topic because, again, as we were saying, I don't know if many people knew the credit implications that are involved in, getting into one of these rental or lease agreements. They sometimes it can be intimidating. I don't know if there's too often there's those door-to-door salesmen anymore that are walking around to get you hooked up with a rental water heater. But yeah, there's definitely more implications than just the monthly payment that's owed on that rental contract.
It is definitely more than just that monthly payment, because a lot of these monthly payments, believe it or not, they can actually affect your debt service ratio, which translates to meaning that your the amount of funds that you can borrow on a mortgage can actually be affected because of the payment that you have set aside now going out to the furnace or air conditioning leasing company. Doesn't happen in all cases, but it does happen in most of the furnace and air conditioner lease contracts we do see. Hot water heaters seem to be exempt from that because, Sam, I don't think we've ever seen a lender look at a hot water heater payment and calculate that as being part of the debt ratio.
That's true. Yeah.
Yeah. So it is good to know that, but at the same time, do you really want to have your borrowing power limited simply by opting to lease a furnace instead of purchasing a furnace?
Mm-hmm.
Yeah.
That's a good point.
So when does that happen? When you purchase or refinance, it's going to limit that. What else could it affect, Sam?
Yeah, I mean, it also in some cases is registered as a lien, and that's going to be the second way that it does affect your credit, because it'll be registered as a lien on your property. We've seen that, a number of times in maybe purchase and sale agreements, or when we're looking up the property and we see, oh, there is an active lien, and that does, give us a flag for the whole deal when we're looking it over.
Yeah, exactly. And that can come from a water softener, can come from a water heater, a furnace, an air conditioner. So really any one of those home appliances, if you've had a professional come in and install it and you're on a monthly plan, chances are that you may not have it registered as a mortgage, most likely, but as a lien. So it's not really showing up on your title, but anyone doing a search on your property will see that there's a lien, and it could impact, lender decisions, and restrict you on future refinancing or selling of your property, right, Sam?
Yeah, that's right. We've seen in some of those sale agreements, or in a refinance where in some cases the lender requires a payout of that lien. And sometimes it's, considerably higher than, what you might assume the cost of a going, water heater or furnace contract if you need to buy it out in order to refinance or sell. You might notice it's a bit more expensive than just that, kind of stock price of the unit.
Exactly. Yes. What tends to happen is the lawyer has to get involved, and discharging that additional legal costs are involved. Mm-hmm. And you're right. A lot of these times, because there's also an interest rate associated with the leasing cost, and there's a leasing company involved with that provider that gave you the furnace or air conditioner unit or water softener, whatever it is, that finance leasing company will still need their interest that they would have earned on that or partial. So there's a penalty to break it early. And that can be quite substantial, sometimes even costing as much as a new furnace.
That's right. Yeah.
Yeah. So that brings us to the third point, Sam. The whole leasing and renting a furnace or a water heater or water softener, it can actually be more expensive, which can impact your credit in these ways. Because you have the option initially to buy it outright and pay for the installation, or have this company come and do the credit and set it up as a lease, you end up paying more for it each month over the term of your whole rental contract, because the term ends up being for such a long time. Yeah. And even if you end up paying every month, you'll still need to pay out the lien at the end. That's still an added legal cost, like we're talking about.
Yeah.
And that can all impact your credit. Maybe you have to borrow more money because you have more expenses. You end up paying more interest costs in the end because the whole idea ends up being more expensive. The best part about these rental contracts, Sam, is the fact that it is a very small amount of money up front to get a brand new furnace, right? You can't deny that having a new furnace is a fantastic thing. But when you add up all these costs, they can really add up significantly. And what I have found, and this is from personal experience as well, is sometimes these rental companies or leasing companies, they don't cover all the expenses that you see or all the repairs. A lot of times they still expect you to do the basic maintenance to upkeep the unit. They won't pay for repairs that are related to basic upkeep, which is sometimes in the fine print, and you don't really realize until you receive an invoice.
Yeah, that's right. I think, like you were saying, I feel like that's also part of the decision process when somebody is looking into leasing it, is in the hope or in at least their understanding that they would be covered for repairs and upkeep. So it's almost like you're paying for that insurance. But again, like you're saying, in some cases, the fine print, it's not as cut and dry as you might think, that any repair, parts, labor is all covered by that monthly installment fee for getting it leased.
Great point, Sam. And going forward, what I'd like to just say is that, a better option that we recommend at Canadian Mortgage Weekly and at our office when we talk to our clients if they need a new furnace or water heater or water softener or air conditioning unit, is to, instead of releasing or renting it, is to actually finance it on their mortgage as a refinance, or Sam, as a line of credit on their home equity line of credit, because in that case, it's a much lower interest rate than the leasing companies offer. And as well, you won't have a penalty to pay it out early. With a home equity line of credit, that's no penalty to pay out early. And your payments can actually sometimes be a lot lower overall, and costs will be a lot lower overall doing it that way rather than leasing it or renting it.
Yeah, exactly. It's much more of a straightforward way than getting it set up. And then again, like we were saying, having it set up as a lien, which could have discharge fees, legal fees, many more implications when you go that route, compared to, again, like you're saying, having it financed through a mortgage or your home equity line of credit.
It tends to add up. So if you do have a lease or a contract right now, that's great. I'm happy, but do look into how much it would cost to buy it out. You can easily do that by calling your provider and asking them what the buyout price is. And that's just something to keep in the back of your mind. If you ever do go to sell your property or refinance, that is a cost you'll have to have in mind. If you are refinancing, that will need to be added to your mortgage. If you are selling, a lot of the times that will need to be paid out before your property can transfer to the new owner. So it's a cost to keep in mind. And instead of having it that way, call us, Sam or myself, to get set up for looking at alternative options to set yourself up with a new water heater. A lot of these times, the equipment has a warranty still that can cover all these parts and labor. And I know that a water heater you can get from Home Depot for $2,000, $2,500.
Yeah.
So to have a plumber come in and install that, or an HVAC tech, all in with the warranty, you're looking at a total cost versus the payments. I mean, we can look at each specific scenario for each client, but definitely give us a call and we can take a look at that. But yeah, looking at next week, Sam, we have a great episode planned. Why don't you tell us a little bit about it?
Yeah, next week we're going to tackle what to many people is a stressful or maybe an uneducated or unsure process of 5 stress-free ways to beat your consumer proposal. I don't think that it's totally uncommon for us to have conversations with clients who have had consumer proposals. And I think for the most part, a lot of them are just unsure of how to proceed once they've gone through a consumer proposal. They don't necessarily know, how to get out of it, ways to set themselves up to rebuild their credit strong. So it's going to be an awesome episode next week as we cover off those 5 ways to keep it stress-free and position yourself in a great position moving forward from that consumer proposal.
Good stuff, Sam. And just a little bit about Sam as well. Sam Thompson is a mortgage agent. He lives in Barrie, Ontario, and originally he's from Ottawa. I moved to the Barrie area just over 2 years ago. He's been with the Mega Mortgage team for over 2 years now as well. Sam, it's great to have you on this episode. And thanks for all the insights here on water heaters and furnace contracts and air conditioning contracts and water softener contracts as well. It seems that almost every appliance has a contract.
Yeah, it does. It definitely does. And thanks so much for having me on, Joe. And again, right back at you. For anybody who doesn't know, Joe Bladek, Joe is a mortgage professional in the Barrie Simcoe area, living up in Aurelia, in the industry for over 11 years. You know, we're getting close to that 12-year mark. But thanks for
Yeah.
having me on the show and for all of your insight as well, Joe.
Thanks, Sam. Appreciate it. Thanks as well for all our viewers watching our show today. If you have a comment or a suggestion for what we could talk about on Canadian Mortgage Weekly, or if you'd like to even be a guest, give us a call or a shout, Sam or myself, Joe Bladek, and we'd love to talk to you. In the meantime, we hope you have a great day and thanks for watching.